check the audio.
The ghost that would like to come visit before we
Yeah.
start the show. Pretty cool. Hello, everybody. Welcome to the PowerCast, live with you every Tuesday night. A fantastic show ahead. But before we begin, we first want to say, unfortunately, we are missing our favorite guy on your far right, Eric Vasquez, who could not be with us tonight. He's out showing properties to clients, couldn't get out of it, need to be there, and he's always taking care of his clients and making things happen. With that being said, in the hot seat tonight, we have our well-known, amazing guy, Michael Cristoforo, guaranteed rate affinity, a legend in the mortgage industry, over 32 years in the business. So if there's questions you have about mortgages, this would be the day and time to make sure it happens. Remember to always follow us on our social media platforms. Go to YouTube, type in Team Powerhouse Real Estate, hit subscribe. Go to TikTok. Thank you very much, TikTok, for watching us here. Go to Instagram. Go to Facebook. Guys, we love being a part of your lives. Go to Spotify. Listen to us on the road. Go to Google Podcasts, Apple Podcasts. Go to Rumble, another great platform for podcasting. And anywhere else you want to find us on LinkedIn, Twitter, etc., etc. We appreciate you allowing us to be a part of your lives on Tuesday nights. And if they're not watching us live, they watch us after dinner.
And they've done that many a time.
Right? So watching this show through the night, through the next couple of days, it's a pretty amazing thing because people love to watch this program. And we appreciate the opportunity to be there for you, having some fun and learning together. Michael Cristoforo, guaranteed rate affinity, again, a legend in the mortgage industry, 32 years in the business.
Yes, sir.
And you are not, well, you lost your hair since that started, I'm guessing.
I sure have. I have lost it a long time ago.
I think I'm losing my hair slowly as well.
I thought the same thing, Dave, but I wasn't going to say anything.
It's okay,
No, just
man.
kidding.
It happens. That's why I'm going shorter and shorter and shorter. With that being said, 32 years in the business, you're from North Haven.
Yes, sir.
You've got a beautiful family,
Thank you.
a beautiful wife named Linda. You've got 3 fantastic, I wouldn't say kids anymore,
No.
young adults. We have Summer, we have Stephen, and Michael.
That is
And
correct.
they all look up to you on many levels. I'm
Thank
sure they
you.
always come to you for all their financial advices and questions. Advices and questions.
Yes, sir. Yes, sir.
That's fantastic. So we're going to talk today about renovation financing, renovation loans. There are many kinds of loans. And by the way, just so you know, no matter where you're looking or watching this program or listening to, this is a program that's available throughout the whole country.
Correct. Yep.
So there might be in different states, different maybe opportunities or laws or restrictions, I don't know. Or if it's across the same everywhere.
It should be the same in pretty much at least the lower 48 states, for sure. It might be a little different. Loan size limits might be a little different in Hawaii.
Okay.
You know, and things like that. But in general, yeah, we're pretty much all the same. As a matter of fact, a lot of my coworkers that are in the renovation department, they actually work in multiple states. So
Right, that's good to know.
Yep.
You want to know about these programs available to you because it gives you another element and opportunity to buy property and have work done to them so they are going to be the way you want them at the end of the day. And knowing this program is very important to you as a buyer, right? And as a seller, because you need to know what kind of buyers and what offer is going to come at you and how they're going to be presented and understand what the process is of going through a renovation program on the buy and the sell side.
Yep.
There's different steps involved.
I think, just real quick, I want to add, I think in this market, people are losing so many bids really easily
Yes.
that if you find a house that needs work, this is ultimately a great opportunity for someone to actually have less competition on some of the offers that are going to come through. If you find a house that's needing a little bit of work to be able to make
A
something
little
happen.
more dated, needs that like from 1970s push to now, or 1980s push to now,
Yep.
or even 1990s, depending what you want to do for your property and how you want to renovate it.
Yeah.
And they can be minimal improvements to maximum improvements.
Yep.
So
Yep.
let's get into a few different programs here. If you have questions, please don't hesitate to ask, because this is a great guy to answer questions. And if you missed this show and you have questions later on, please put it in there for us, and we'll get back to you, having Michael in touch with you, or we'll get back to you ourselves with the answers from him. All right, so how many different kind of renovation programs are there in the industry now that you could talk about? Well, actually, yeah,
We offer 5 different ones.
that's fantastic.
There's 5 different ones, because there's different kinds of products for different kind of people, depending on credit scores, depending on whether or not they're VA eligible. There's just different things that are available.
Let's go through the 5 first as a whole.
Yep.
What are they
Okay.
called?
Okay, so we have the FHA Limited, which is a maximum of $35,000 in
Let's not-
improvements.
Don't give me the details yet. Let's
Okay,
just
got it.
There's so many details on each one of these. I don't want to go and just.
Yep,
So
makes sense.
the 5
Yep.
different kinds are.
Okay, so we have the FHA 203K Limited, we have the FHA renovation, we have a VA, and we have 2 conventional versions. We have the home style and the Freddie Mac choice.
Excellent. All right, now let's get into it. Let's dive right into it. So the first we're going to talk is the 203, the FHA 203K Limited.
Yep.
What does this mean by definition?
So it's a limited scope of work that's going to be done on the property.
Yeah.
It's going to be limited to, it says 35,000 by the guidelines, but in general, you're going to have it under $30,000 worth of work.
Okay.
No structural can be done on that particular product.
Now that's important to know when you say limited work. So limited can include a roof or no?
Yes.
So it includes
Absolutely.
a roof. That's pretty amazing. Oh, we got a question out there.
Charles, he said, does my new deal with time to own need a fridge in there because there is not one?
Okay, Charles Gaetano from Team Powerhouse Gold Banker, a beautifully amazing agent on our team, has a question sidebarring for what we're talking about here, just not to confuse you guys. So her question was on a time to own, which we'll do a whole other chapter on, by the way.
That is a CHAFA loan. The time to own is a CHFA. They will not do a renovation with the CHFA.
Charles' question specifically, again, has nothing
Yeah.
to do with this. Does it need to have a refrigerator in the house
Oh,
on the time to own?
I'd have to take a look to see whether or not she picked it, whether or not, we'll talk about that after with Charlie, but it depends on whether or not it was an FHA or a conventional. We'll talk about that offline.
All right, guys. Going back to Mike, and thank you, Charles, for being on the show and watching what's going on here. We love having her out. Maybe if you guys can let her know you want her back on the show and have her visually available to answer questions, talk about her real estate life and what's going on with her, because she's got so much to talk about all the time. She's an amazing woman. All right, going back to this FHA 203K. So it basically means up to $35,000, realistically $30,000 worth of work in their
Correct.
property, right? Can there be any kind of relationship between the buyer, the agent, the lender, the contractor?
No, nobody can be related to anybody.
By
FHA
last
is very
name
stringent.
or by cousins. Because no one really knows if it's cousin. You may not even know cousins.
If it's
Hypothetically.
different
Off the
names
record,
and
on
they
the
don't
record.
see, I mean, nobody can be related to anybody. Realtor
Okay.
cannot be related to the contractor. Contractor can't be related to the buyer. Nobody can be related to me.
So no one can be related to anybody here on this show. I'm just kidding.
Correct. You-
No, but on the FHA 203K, I'm sorry, Mike, I just put that out
No,
there.
no,
So
you're good. I expect that, Dave.
technically speaking, we cannot have any relationship on that kind of program. Good to know. All right, so what kind of property would qualify for this type of program? I mean, there's many different homes. So,
Yep.
single family,
Yes.
2 family,
Yes.
3 family,
Yes.
4 family,
Yes.
5 family.
No.
So a single family, a 2, 3, and 4 family house qualify for an FHA 203K loan with up to about $30,000 of the work to be done. Now,
And a condo. You forgot the condos.
oh, and a condo too. You can do that on a condo.
Absolutely.
That's amazing. Now, typically, condos don't need a lot of work inside. I mean, I would think.
No, I mean, but like, let's say for example, they're buying something that it doesn't have the utilities turned on.
Ah, good point.
That would be something they would be able to do a renovation loan on and
So
get
if it
around
needs a
all
heating
that.
system, an AC system, all those things included.
Absolutely.
So in a house that needs work, it could be a kitchen, could be bathrooms, could be a heating or cooling system, could be flooring, could be paint.
Yep.
Yeah, up to $30,000.
Nothing structural. Yep.
Okay. And how much money can you get? Well, we know $30,000, right? Now, what is a draw? I hear the word draw being
Yep.
used in these programs. What does the word draw mean?
So a draw is just the actual activity of giving them a piece of their money for the improvements that were already done.
So how often the buyer or the contractor can say, "May I please have some more?"
Exactly. Now, I just really quick wanted to add something. So on that draw, the contractor is going to be limited. A certain amount of work has to be done before they're going to be able to ask for that.
So if a job is $30,000, do they get an upfront VIG or a percentage of that money
Yes, on the limited
on the
or
limit?
the streamline or whatever you want to call it, yes, they will give you 50% of that $30,000 worth of work up front. And
So
then
15 G's upfront for the contractor to start the job because they need a little something in the pot to kind of
Yep.
get themselves going.
Yep.
Now, I'm not sure if this is the right question, but how specific of information does a contractor share with the lender with a renovation? Is that depending on the kind of loan it is? That depends on what information has to be shared?
the contractor is going to get approved along with the buyer. The contractor does have to fill out, various information that we double check and, verify that he is reputable.
Reputable, has
He or she,
experience.
yep.
He or she has experience. Because that's a great question. So is there a certain timeline that needs to be in the business? How many jobs have you had done before?
That is, yes, they're gonna go through all that kind of stuff.
They're gonna vet.
They have to be licensed with the state of Connecticut. They're gonna have to be bonded. They're gonna have to be insured.
Okay.
They're gonna do a background check, make sure that they don't have, issues that they've had in the past.
It makes sense because at the end of the day, bless you, at the end of the day, the bank wants to make sure that we're not going to have like a runaway bride situation with the contractor.
Yeah, and for both
both.
parties, the buyer and the lender.
Well, the money
Neither
doesn't-
one of us.
But the buyer doesn't get the money in there.
No, but we're still representing and working with that buyer, so we
Fair.
want to protect them as well.
That's actually very good. Can a homeowner do any of the work on the limited or streamlined,
No.
as you mentioned? So the
No.
homeowner is not allowed to touch a hammer, a nail, do any work. It has to be the contractor does all the work in this program. Very important to know. Because
Right.
how often a buyer goes, well, I'll do the work myself. Not allowed.
Not allowed on
Not
this job.
bupkis. You're getting a contractor, they're doing all the work for the 30,000 or less, yada, yada, yada. And what is the minimum credit score a buyer would need for this kind of loan?
580,
Wow.
580.
580 is pretty low. That's pretty wild stuff that you can actually get a renovation loan with a credit score of 580. You know how often people say, oh, I want to build my credit before I could actually go and buy something. The first thing you should always do is call us as the professional. Allow us to introduce you to Michael, who's going to help guide you in the right direction to see if you can get a loan now. So you might be out there going, oh, I can't buy a house. Do you have a job? How long have you had a job for? You know what I mean?
Yep.
How much money you have to put down? What kind of purchase price can you get up to? And with a 580 credit score, I'm sure there's room for errors, pluses or minuses in there, if you will.
We do need to have an approval through the system with a 580 credit score, so.
And we would want that approval before we go shopping with the buyer
Absolutely,
anyway.
absolutely.
And you as the buyer would want to make sure you know out there in advance, I can do this and I've got the right guy making it happen. All right, what types of properties we talked about? What types of properties can you use these loans for? And again, it's single family home, it's a 2-family, 3-family, and 4-family. All
And
right.
condo. Yep.
And a condo. All right. So we're going to jump now to number 2, the FHA 203K standard.
Yep.
What does this mean, a standard loan?
So that would be any loan that has a structural
Oh.
piece that needs to be done.
Oh, wow.
So that automatically throws it out of the limited or the streamline.
Okay.
And that would automatically require, and it could be anything over that $30,000 worth of work as well.
When you say over 30,000, is there a maximum amount of money you can use or have?
There is hold on, let me just real quick, just
And is that
refresh my
dependent-
memory.
No, it's okay because listen, there's a lot of pieces to this puzzle here. So they want to buy a house for, $350,000.
Yep.
Um,
So they'll go up as high as the loan limit for New Haven County right now, the loan limit is 472. So they would allow to go up to the county limit of 472.
So if somebody needs $100,000 to fix the house up,
Yep.
or $150,000,
Yep.
no problem.
Yep.
200,000.
Nope.
That's amazing.
Up to
Now, when you
4%.
say structural issues, now that's a very dangerous word we hear about is structural issue. Buyers, oh my God, agents, structural.
Mm-hmm.
You know, what is exactly by structural when you say structural? Are you talking about like a foundation structural? Are we talking about wall structural? Are we talking about roof structural? Because, I mean, how
It can be any of that.
can the roof can be considered structural for the
No.
value? Okay.
No, and not unless if you are doing something major, like maybe changing a roof
How
line
about
or
adding
something.
how about an addition? That
An
would change.
addition would be a full. That would not be, because we're doing a foundation and we're doing the whole.
So that's a different kind of loan.
No, it's not a different kind of loan. It would not be a streamline. It would be a full K with the structural work. That would be a
So,
standard K.
so the standard can include an addition on a house.
Absolutely, yes.
Oh wow.
Yep.
That's pretty cool. So you could
Yep.
actually put an addition on a house. Any questions out there, Thane?
From Charles again, does the buyer do the inspection first and find out if they need this type of loan?
That's a great question. Charlie Gaetano, a genius out there from Team Powerhouse, asking me a phenomenal question.
Yep.
Does the buyer do an inspection to find out if it needs this before they kind of, so it's kind of a twofold part because you're making an offer on a house, right? Let's say going with an FHA loan, but then they find out the house has a structural situation there. They could potentially use now an FHA 203K loan, stay
Yep.
in the deal, moving forward, and depending on what is need to be done, can actually move forward with the loan.
Yep. Yep.
What a great question, Charles. It's
So
phenomenal.
Can I add one thing to that for
Yeah.
Charlesy? Is that we didn't really talk about it, but basically we would actually have you pay for a HUD consultant, and when the HUD consultant goes through the house, you can hire a consultant that's already a licensed inspector, or you can bring in two people, and they will work together to see how much money it's going to cost to do the improvements with a HUD consultant.
So the buyer, while they're going to have an inspection done, would probably be in their best interest to hire an inspector that's also a HUD consultant.
I agree. Yep.
Paying one inspector. Now that inspector is going to identify if this is a property that needs any kind of structural work to it. Otherwise, if you've already done the inspection and it needs it, now you have to bring a separate inspector that's a HUD consultant specifically that deals with the
Right.
FHA 203K standard program.
But the HUD consultant also gives us an estimate as to what the cost is going to be for those improvements that the client wants to do. And then the HUD consultant then works with the contractor to have those numbers all come into agreement, to then put that in with the appraisal.
So-
Because real quick, I just want to say you're going to need on these loans, you're going to need 3.5% down on the purchase price plus the improvements. So that's
Okay.
the dance that they're
So
doing.
the 3.5% down on an FHA loan, we know FHA 3.5% down. You could always put more,
Yep.
but now you have to put an additional 3.5% down on the money you're borrowing.
Correct.
So if the original purchase price was $350,
Yep.
you're putting down 3.5% down, which is roughly 10 grand. It's in that ballpark. And then if you're going to take that house at 350 and you need to do another $100,000 of improvements,
Yep.
so you're doing a 3.5% on the 100,000.
Yep.
Interesting.
Yeah, so you're putting down 3.5 on the total of 100 plus the 350 you said, or 250?
Yeah, 350.
whatever.
Just yeah.
Yeah.
So I'm gonna just throw a curveball at you.
Go ahead.
What about closing costs? How does that work?
You would pay those as well as the down payment. That would
Okay.
be on top of it.
So remember that when you're buying a house, you need closing costs. Closing costs are a makeup of costs based on taxes, insurance, and mortgage. Roughly, if I said 4% of a purchase price, would that be somewhere in the arena?
Sure.
Is that a
I'll say-
conservative number?
It depends. It's going to
varies.
be a little bit more on a renovation because
Right.
there are some extra additional
So you
costs.
figure you have closing costs in the ballpark of 4%. You could say 5% of closing costs. You need to have money in this property purchased no matter what. You have the 3.5% down in FHA. You get about 4+% on the closing costs. And if you're doing this renovation program, I mean, honestly, if you not need to pull out 100 grand to fix the house up, and you don't have to bring on 3.5%, that's a win-win. And you guys get to have a house that is going to be exactly what you want it to look like and be fixed up. Love
Exactly.
it. Let's go back to these FHA standard questions as I was talking about before.
We did. We said that was up to the maximum of the 472 for New Haven
For New
County.
Haven County.
For a single family. It goes higher on multis.
Oh, so depending on the kind of house it is,
Yep.
the purchase price can be higher and the renovation finance can be higher because obviously it's a larger home, more involved, multiple kitchens, bathrooms,
Yep.
yada, yada, yada.
Yep.
What is so the maximum repair then would be, I guess, unlimited based on,
It's limited, it's capped out at the purchase price plus the improvements up to that 472 on the single
gotcha.
family.
Can the buyers do any work for this program?
If it's very discretionary, it's going to be based on, like, if you have somebody that's a licensed contractor, they might allow them to do up to 10% of the profit project.
Well, how about painting, for example? Painting is something, let's say, as a buyer.
Yeah,
No. Zip up.
no. If they work out a deal with their contractor, we don't know about it, but I mean, we want to pay a contractor.
Is that
to-
a conversation we could say on the record?
No, that's me between them and their contractor. It has nothing to do with us.
All right. Let's see. Sorry, getting a little sidetracked over here. All right, let's jump to the next one. We have a Fannie Mae homestyle loan renovation. Have you ever heard of a Fannie Mae homestyle loan renovation? I feel like for some reason I think of Fannie Mae, I think of like waffles and syrup. Like I think of, that, I don't know, Fannie Mae is
Yeah,
like
you
the-
think of,
Yeah.
yeah, I get what you're saying.
Yeah. Okay, so Fannie Mae, I'm hungry, what can I say over here? Fannie Mae homestyle, it's like a homestyle. I'm thinking about the chicken and waffles right now. Oh my God. Little country fried chicken, waffles. Is anybody else getting hungry out there? It's 5 o'clock somewhere. Maybe a drink.
Here.
It's actually way fat, but this is flying by me. All right. So Fannie
Eric,
Mae-
where are you?
Yeah.
I'm just kidding.
Fannie Mae homestyle renovation loan. What is this type of loan? What is this exactly?
It's a conventional renovation rather than the first two that were FHAs. This is just a conventional version
Okay.
of, got that one and the choice. They're both conventional versions.
Okay, so the choice and the Fannie Mae are, and by the way, what kind of a credit score do you need for these kind of mortgages? Is that a fair question?
620.
620 for a conventional. So on the standard and also the Fannie Mae, it's 620?
No, you're comparing. The
Sorry.
standard is an FHA.
So that's 580.
580,
Okay,
correct.
so 580
Yep.
in the limited and the standard.
Yep.
On Fannie Mae, we have a 620 credit score
Correct.
needed, which is, again, not bad, 620, right? Let's get to your lender, let them look at your credit, let them see why the credit might be a little wonky so we can get it fixed. Eric loves the word wonky, by the way. So let's get that credit identified. The faster and the earlier you learn about your credit, the better chances of it being increased because you know how and what to do to increase it. Sometimes it doesn't take a lot to increase credit. Sometimes people have no idea that if they just paid a little bit of their credit card bill down or something,
Yep.
Who knows what it is.
Yep.
Sometimes there's things on your credit score that you don't even know they're there. It may not be yours. You should definitely talk to Michael. Make sure to learn about your credit so you can get that fixed in advance so you can be in the best position to buy a house.
Yep.
Okay. Minimum down payment for this kind of loan.
It depends. 3%. There's some first-time homebuyer programs, but in general, 5%.
Okay. So is this loan type a larger loan type?
Yes, it is total combined on that one. On a single family, we're looking at $726,000.
700, so almost double. $726,000 is a
Yep.
huge difference. So you go to 720. That's New Haven County.
Yep,
Holy
it's a conforming loan limit. It's the same thing as if you bought a 5% down conforming loan limit. It would be the same thing.
So, and that's a single family house.
Correct.
So if you're going to go to a 2-family or a 3-family or 4-family, that would probably go a little higher.
Correct.
Pretty cool
Correct.
stuff.
Yep.
So if you're looking to buy a little more expensive of a home, this is the loan for you. And you're looking at 3 to 5% if it's your first time or not, or second time. Can any of these programs be used to flip a house?
To flip it and not to keep
Let's say
it?
the buyer goes, that house needs some work. You know what? Let's fix this house up. You know what? We finished the house and it just doubled in price value. Can I sell the house?
That's not the goal of the product. They
Right.
do allow.
So you have to hold the home for so much time before you should actually be able to sell it.
They do allow you to buy this, using this product, a single family as an investment
Oh,
purchase.
wow.
But typically they want it for investors that want to keep the
To
property
be rented out or
to
something.
be rented out. It's not something that they should be, it's not for flippers. This is not designed for flippers. This is designed for somebody that's going to actually purchase and keep it as a rental property
Got it.
on a
So you-
single family only.
What if you want to buy a multifamily?
No.
You can't rent
not-
out a multifamily?
oh, You're not allowed to do this product on a multifamily, only a single family.
Oh, the Fannie Mae one.
Fannie Mae.
My apologies.
Yep.
On the last two, you could do multifamily.
Yeah, you can do multifamilies, but those are all, FHAs are always owner occupied.
So you have to live in the house for at least 1 year,
Correct.
and then you can rent out. Now, in a multifamily situation, though, you're going to be living in it, but renting it out anyway. So in
Correct.
this one here, if you're buying a multifamily, again, you have to live in it
Correct.
for
It's
at
gotta
least
be
1
owner
year,
occupied.
right? And then you can rent out as much as you want to rent out, yada, yada, yada.
Correct.
So again, learning about these programs available to you will help you build what's the word I like to call it, where people own multiple homes in their life.
Portfolio?
Portfolio. Do you own a portfolio? Do you want a portfolio of homes? This is the guy to start that portfolio. And if you need a realtor, since Eric's not here, you want to call me. Or you can call any one of our team agents who would love to help you out to help build this portfolio. Guys, the market right now is changing. It is really changing dramatically for many, many reasons. And let's not let the rates scare you, because what I can tell you is my first home I bought, 7 to 7/8.
I was 7.5.
7.5. So one of my point is that these rates are going to come down, and the best part is when you buy these properties, you're going to be the first one to the race to win, because the market is going up. It's between 10 and 15% per year going up in value. It's not going to crash. It's not going to drop. We're actually seeing the market go through a change now, and the pros and the cons for the buyers right now that they don't realize that homes are not in surplus, but what I would say to you is the property prices are stabilizing a little bit. They're gradually going up versus crazy going up. But I'll tell you, over the next year, you'll see another 10 to 15% minimum increase in value. In addition to the fact that what's going to happen is slowly the rates will come down in the next couple of years. So if you buy now, you're going to buy at a cheaper price than a couple of years from now. And because when the rates come down, what's going to happen, Mike? The value's going to go boom, up again. You're going to miss that boat. You don't want to miss the boat. People always said, I wish I coulda, wish I shoulda, coulda.
Mm-hmm.
It's all about timing, understanding, and less buyers are shopping right now than there were before about a year and a half ago. So you have less competition. Any other questions out there, Thane, with Facebook, Instagram, TikTok at all? If you want to just check that out for us while we're talking over here. All right, so we have an investor loan program, right? I'm sorry, not an investor loan program, but it's like an investor for,
So an
Property
investor that's
to
going to live in, that's going to hold the property.
Which
So
is pretty
only on a single family.
Only a
Just
single
make that
family.
very clear.
and there's a certain credit score for this. We talked about the credit score for this one here. Is it 620?
620, correct.
620. All right.
Correct. Yep.
And what is the max amount of money you can use for this loan?
The maximum amount of money that you can use, but the total,
So total is 726.
correct. Yep.
So again, just going back and repeating myself with these questions, 726 maximum mortgage, but you can do a couple $100,000 of work if you need to.
Absolutely.
That's pretty
Yep.
amazing stuff.
Yep.
All right.
Yep.
There's also a Freddie Mac choice loan.
Yes.
What's a
Very-
Freddie Mac choice loan?
Very similar. It's another conforming loan amount. It's another conforming loan type that we can actually put someone in. They're very, very similar. There's a couple of nuances that are different, but in general, it's, they're very similar.
Is it a dollar amount change?
No, nope,
Is it a credit score change?
no,
Is it a money down going to change?
no.
Is it, what is the change from a Freddie Mac choice loan versus a Fannie Mae?
There's some things that, there might be small nuances that we would know about, that might be draws, that might be different.
Okay.
Various things like that we would probably, make that determination more so than what you as buyers or you as realtors are concerned with. But I don't think we have to spend a lot of
That's
time
fair.
on that
When,
difference.
when someone's writing the offer as a realtor, and you're writing down 203K loan,
Yep.
do you need to put Freddie Mac versus Fannie Mae versus?
No, because FHA is separate than home choice and home, the choice or the home style.
So the choice is going to be a conventional loan.
These two will both be conventional loans
So-
versus the FHAs. The
So
first
the
two.
Fannie Mae and the Freddie Mac are conventional loans.
Correct.
Versus the FHA standard loans.
Correct.
Got it. Okay.
Correct. Yep.
Unlimited.
Yep.
And then of course you have the VA.
Yep.
We love you who have served our country. The VA is a great mortgage that allows you as a person who served our country to get a property. And with that, they also have a renovation loan program for that.
Correct. Yep.
Now, typically in a VA loan, there's no money down, technically
Correct.
speaking.
Yep.
How does that work in this one here? Is there still money down or no?
Nope, it's still 100% financing.
100% financing renovation loan.
Renovation loan. The maximum that you can do on the renovation VA is $50,000 worth of improvements. So,
Okay. So it's limited in the sense of it can't be a complete gut job over here.
yes,
It needs,
correct.
but $50,000 goes a
Yep.
long way, especially with the right contract.
Yep.
And with that kind of loan over there, you have credit scores with the VA, the same as credit scores with the.
No, they'll go even lower.
Really?
Yep, they'll even go lower. They'll go down to like 560. something
Wow.
Like that. Yep.
You know, I'm happy to hear you say that because those who have served their country should have a little bit of extra
Yep.
space or wiggle room. Again, 560, that's pretty low.
Understand too on the VA loan,
Yes,
that's 50,000 is the max improvements.
yes.
But the VA limit right now is over $1 million at 100%
What?
financing if they qualify, if the income's good enough.
Over $1 million on a purchase. So if they,
Yeah.
let's say, buy this house for $1 million, which, again, you know, why not? And they need to, let's say, go to master bathroom and they want to spend 50 grand doing it, no problem.
You can do it. 50,000 is the max, correct?
Listen, on $1 million house, I'm guessing that a master bathroom is in the ballpark of something like that because the kitchen's by 100. So I just said 50 grand for the master bathroom. If you guys agree, let me know. If you don't agree, tell me where to go. So VA renovation loan
Yep.
also is a product that is going to allow people up to $50,000, $1 million policy, 560 a credit score, and that's on a single family home only, or is it also including
That is a 1 to 4 family.
also on the
Owner
four family?
occupied. Yep.
That
Yep.
just blows my mind. And you know what? I'm guessing in Fairfield County,
Yep. I'm gonna
these
confirm.
dollar amounts are going to be a little higher.
I stand corrected. It's a 1 and 2 family on a VA. I
Okay.
stand corrected. Sorry about that.
That's okay, buddy. Listen, that's why we have
Yep.
the cheat sheet right
Yep.
here, right?
Thanks.
Listen, absolutely. There's so many things to choose from. So I mean, how could you know everything off the top of your head? But so on a VA, it's 1 family and 2 family.
Correct.
I think most. Well, I shouldn't say that. I'm going to say most anything. Yada yada yada. All right, so pretty good stuff. So we have 5 different kind of loans for you to talk to Michael about if you're interested in buying a home, building a portfolio, getting a chance to have property for your future. It could be for today, your personal home. It could be your family home. What about a parent's home? Can you buy a home for a family member, like a mom and dad, or
If it's a single family and we call it an investment purchase
yes,
and it's going to be rented,
yes,
then yeah, that would
So,
qualify
if
as
mom
that
and dad-
conventional.
renting the house.
Yeah, I mean, whether they rent it to mom and dad or they rent it to anyone else, I mean, it's still a single family owner, a single family investment property. This product conventionally would allow that.
That's pretty amazing stuff. Everybody here, we didn't even talk about Michael Christopher's cell phone number yet, and we didn't give you his email address. But I'm sure Thane, if he hasn't put it on the screen yet, is going to get it for you there now. So Michael Christopher, if you don't mind, can you please share everybody your cell phone number, because it's a great way to get a hold of Michael. Michael loves if you call or text him. He'll also take an email, of course. What is your cell phone number, Mike?
203-314-7352.
203 314
7352.
7352. Thane, you have that on the screen.
213-314.
No, 203
203.
314
7352.
7352. That's Michael Cristoforo. His email address is first name Michael dot last name Cristoforo at.
You want me to spell Cristoforo first of all?
That's a good idea. Let's spell Cristoforo.
Chris 240. So it's CHRISTOFORO.
I appreciate that information today and now. I know you for many, many years, and I've always fumbled on that one there. So I appreciate finally knowing how to spell your name correctly. That's good stuff.
At grarate.com.
At GRARATE.com.
That's correct.
Guys, this is a guy with many, many years of experience, 32 years. 32 years of knowledge. That is far and few in this industry that are still like at it. Because most people have heart attacks, chest pains, things that get in the way with this real estate career, specifically in mortgages. They've gone through the amount of things you've seen in 32 years.
I had a full head of hair 32 years ago, I'll tell you right now.
We're going to have to find that photo with Mike with a ponytail. Coming soon, a photo near you. High school photo. Did you have a ponytail back in the day?
No, sir.
No,
I was able to pull a small one when I was in college. I bragged to my daughter
you
on
had the
that.
man bun.
Yeah, a little bit, yeah.
I love it. I love it. Everybody, thank you so much for joining us here today. TikTok, Facebook, Instagram, YouTube, Twitter, LinkedIn, Rumble, Google Podcasts, Spotify, in the car on the way home. Guys, we love being a part of your lives. We appreciate the opportunity. This is David Lamel, Michael Cristoforo, and Eric Vasquez, who couldn't be here today. I want to say thank you so much. But before we go, we always have to make sure we give you a tumbler. So, without further ado, who's going to be a lucky winner for a tumbler tonight? Thane, hit that spinning wheel, please. Sound like it skipped for a
It's longer than the podcast.
second, right?
X28.
Olivia with 3 A's, X28, congratulations. You won yourself a tumbler, a much prettier version of this. It is a thinner, narrower tumbler. You have the choice of black or pink. You get in touch with us, please. Let me know. I'll get it out to you. And thank you so much all for watching the show. Guys, have a wonderful evening. We'll see you next week with another great show for you. We have a special guest who was on the show before from Nona's Pizza. His name is Ace, is his nickname. Makes an amazing pizza. Southington, Connecticut, Nona's Pizza. Next week on the show, you're not going to miss it.